prices across the board. Ladies and gentlemen, please be careful. Sell everything. Have I got your attention now? Jokes aside, we have a situation in the marketplace that we need to address. Going into 2023, we have a story that we need to keep in our minds. We've seen a little bit of movement to the upside today, ladies and gentlemen, all on light volume. A couple of those Tesla short players are taking profits. But we cannot dismiss the fact that the Fed increased the interest rates 4 times. And we've only had a couple of drop points in the inflation rate. We're still at 7%, ladies and gentlemen. We haven't had the full impact of interest rate increases. We're going to know when we get into 2023. So what signs should we be aware of? Well, the first red bell, or should I say red flag, is the fact that Goldman Sachs is now cutting 4,000 jobs. Goldman Sachs is cutting 4,000 jobs amid global economy fears. They don't think it's going to look good in the near future. Goldman Sachs gets paid to make money, and they're cutting 4,000 jobs. Usually when that happens to a household company like Goldman Sachs, it kind of creates a ripple effect. And the ripple effect is already happening. Meta got rid of 11,000 people. Okay? Twitter. Any more? Amazon. Have a look at this. This is a layoffs chart, which shows you all the layoffs that have happened, non-US and US. And you can see how many layoffs are happening right now. Goldman Sachs, at the same token, did say that there will be a lot of job losses, which is going to increase the unemployment rate. That's good news for the Fed, because right now there's 216,000 people only claiming benefit. Today's unemployment claims data came out and showed only 225,000 people, in line with estimates. What does it all mean? It means that the labor market could be coming to a halt, and it's going to start wearing off. I not so long ago went to a supermarket, and the lady at the counter was having a conversation with me, and I said to her, how expensive have things got in this supermarket? And she threw out a price. She said, everything's gone up by 10%. I was like, okay, fair enough. So that's that one supermarket. Prices of normal everyday goods have gone up by 10%. Although the average wage in that company has been risen by 1.2%, the cost of the goods has just flown up. Now we're going to start seeing the impact of that. Money's going to stop moving into companies. The idea of a consumeristic mindset, buy, is going to slow down, because if people are getting laid off, well, what more can you ask for? That's what the Fed wants. It wants people unemployed. They need the unemployment rate to jump up to 6%. To really see and absorb the idea and getting close to their goal of 2% inflation. But let's park that, ladies and gentlemen. Let's look at the bigger picture of what's going on. Check this out. Gold. Now, gold has been slowly climbing up, and there is speculation about China and Russia grabbing up as much gold as they physically can. You can see from the chart where we are. Most of the accumulation of gold is going in the tons, ladies and gentlemen, and it's flying up. And at the most in 55 years. Why are they picking up so much gold? Because this is what happens. When you're projecting a problem in the future, you need safety. Now we're starting to see gold acting as the true safe haven. Sorry, Bitcoin. Sorry. Now's not your time. Let's roll over to the charts, guys, so we can make sense of this bad boy. Welcome to Bitcoin. Now listen, if you are new to the channel and you haven't got access to these indicators, make your way over to tradersreality.com. Go straight to the Start Here tab, and it's going to walk you through everything that you need to use the tools that I'm going to be making reference to very shortly. Okay, follow the steps and you'll see exactly what I'm talking about. And then that way, any video that I bring up, you'll be able to marry up the same analysis and cross-reference it. Okay? This is all free. You can download these indicators free of charge. Just follow those steps on the Traders Reality website. Now, Bitcoin. We're going into the last day of trading, ladies and gentlemen, so it's very important that you hear me out on this. Right now, Bitcoin on the daily time frame, what does it look like it's doing? Where's our little rally? Where's the Santa rally? This little fart to the upside. What is it? It's nothing. Principle would say that Bitcoin is rallying down. They hit the 50 EMA, showed the commitment, and price then rips to the downside. Now we've got a little bit of a consolidation, but volume is light across the board. All you need to do is just pull up this volume, and you can see bright as day. Volume is tapering off. Why? Because all these investors, institutional fund managers are all kicking back at home with their families and not even bothering with this bad boy. They know what they're going to be going into when we start the new year. Rolling over to other assets across the board, you can see bright as day. Look at the volatility index. I said it to you. The volatility index needs to be at around 30, 35 for us to truly absorb the idea of fear. Because the old school saying goes, when it's high, you buy. When it's low, you hold. Okay? We need this bad boy to move all the way up to plus 30s for us to truly understand that there is fear in the marketplace. That's what the volatility index indicates. Having a look at Tesla today as well, you can see that Tesla, I mean, look at the descent from Tesla from its last high over here. Look, it has actually dropped 65%, ladies and gentlemen, $314 a share, all the way down to 121, with the prospect of actually moving down even lower. Even by the principle of the vector candles, you can see bright as day that we have ourselves a terrible, terrible gap in the chart. Look at this. If we marry up the gaps in the chart, one gap met with a vector candle in the middle of that zone, right there. That takes us to 86. Followed by another zone right here at 69. I ain't even going to go down there. I am not going to go down to this point right here because that will be a sad story for Tesla, but a great story for all the short sellers. And if we actually just bring it across to the chart, you can see we are not too far away from that point, guys. Naturally, in all bearish markets, there are what we call rallies. When price goes down, it returns back up into the mean to continue with the intention. What is going on? If the idea of short-term interest is what is happening. Now, what do I mean by short-term interest? Similar to what I said last night. Investors aren't locking money up for longer periods of time, okay? So they're not going to the US government and giving the money over a 10-year, 30-year period. They want it sooner rather than later. That tells you that the economy is not looking good in the future because people aren't investing money for a longer period of time. The same principle applies in the marketplace. When you see the markets trending down, you've got to move to the downside. When it moves back up, what's going on is leveraged traders are opening shorts and the marketplace is returning price all the way back up to do two things. First thing, they're hitting the liquidation points and the margins for the traders that are short and they're not paying themselves. Secondly, the ones that are paying themselves need to do what is called a buy to cover. Because when you buy a stock, you sell it. When you sell a stock, you buy it back. And the principle is buy to cover. Okay? Now, with that being said, guys, Tesla has been taking a bit of a nosedive, but just be cautious. Tomorrow's the last trading day. And usually what happens is when we come towards the end of the year, institutional fund managers like to bulk up their portfolios. The actual term is called bulking up. So that when they start the new year, they have a little bit of a portfolio. Any couple of increases on there kind of sets them up for a positive outlook. Now, what we've seen them doing is they've been dropping price significantly across the board. So this little move to the upside, or what I like to call a little fart in the chart, doesn't mean that the bears are done now and that the bullish market is going to start. Don't fool yourself. Once the yields start coming down, because they're trending upwards, ladies and gentlemen. They're putting money into the government and then they're taking it out. And look at the yields. They're getting ready to turn, man. These are the 10-year bonds. They're getting ready to roll. Okay? Looking across Euro and all the Forex pairs, you can see Euro is coming back up nicely to that 6675 zone. But it would be consistent with a cyclical move to the downside. If we go into the smaller time frames, okay, you can see, if I bring up the 4-hour chart, what we've got here is euro has been moving up non-stop, but it seems to be stalling inside of this zone and forming what would appear to be an M structure. What is an M structure? This is a psychological pattern. I'm going to finalize it right here. Check this out. An M structure is a psychological pattern because the first instance it's designed to make you commit liquidity and move price to the upside. Mr. Market Maker traps the retail traders long. Look at this red vector candle right here. Stop hunt rise, commit the retail trader to buy, rips it back down again. He then makes them believe that we are now buying the dip and euro's getting ready to make another move to the upside. But the big climatic candle that happened right here hasn't followed through. Yes, they've recovered some of the wick, but for us to believe that the euro is going to continue higher, it would need to make a significant break above this zone. And when it does do that, we would need to see a rise, a retest into that zone, and then lead into what appears to be a continuation, which would then suggest to us that the market maker is not finished with his short building. Remember, if the markets are going to drop across the board, they are going to drop it from the highest possible point. So be careful with your longs. Pay yourselves and never trade into the narrative. Don't trade against the idea of the market going down. If you go over to the NASDAQ and the S&P, you can see bright as day. Look at this. Look at the behavior of the NASDAQ and the S&P. Drop, retrace, drop, retrace, drop, retrace, drop, retrace. This retrace right here hasn't done anything. Look. Notice how NASDAQ has made its way back into the recovery of the violet vector candle. Still got the resistance of the 50 EMA on the 4-hour time frame, but they are leaving clues as to what is going to happen soon. Look at the distance between price and these vectors. They have not come back to them. Volume is nothing. It's terrible. Look at it. It's down. And they've made this move to the upside. Well, let's just look at the last time they made a move to the upside. Look at these volume bars right here when they try to shift out. More on this side, but less on this side. What is that suggesting to you? It's telling you that price has only risen on light volume, which does show that there's not that much commitment. So, ladies and gentlemen, moving on. We're going into the last trading day tomorrow, Friday. And Friday's always that tricky day, guys, where they either make a run for profit or they actually base out and prepare for the start of the new year. And ladies and gentlemen, we are going into some bad boy news announcements. We got the JOLTS job openings happening. We got the FOMC minutes, the ADR employment change. Oh man, we're going to start the year off with wild volatility. So get yourselves prepared. It's going to be a big, it's going to be a bit of a problem. Yeah. Listen, mad love and respect, ladies and gentlemen. Let me start again. Mad love and respect, ladies and gentlemen. Be sure to like and subscribe. It doesn't cost you anything to do. But more importantly, thank you. It's been a pleasure sitting here and serving you all, shouting at you all, and trying to guide you all into understanding how the hybrid system works. Okay? You want to learn more about the hybrid system? Check out the Patreon. And the community there is fire. They're always chatting away about various ways of exploiting the hybrid system. And I'm always in there making sure that their minds are aligned to make sure that they can project price for themselves. Have yourselves a wonderful Christmas period and a happy new year. And I'll be checking in with you all next year. Peace.